What are the latest trends for fixed income investments for Asian local currency bonds?
Well, I would characterize the latest trend as one of greater diversity in terms of issuers. If you look at some of the more developed markets in Hong Kong, Singapore, and in the dim sum bond space, what you get it's increased participation not only from domestic issuers. You do get other non-Asian corporates, particularly Korean quasi-sovereigns, and more generally multinational companies such as French automakers and in the US and other MNCs tapping Asian fixed income as a way of additional funding. I view that as a very positive development on a secular time horizon, just because as an active fund manager, we welcome greater diversity, and it certainly provides a greater platform in terms of active management of a fixed income portfolio. We're also seeing more and more new first-time issuers tapping the market. We welcome that, and interestingly, more and more companies, evident in Hong Kong in particular, that look to tap the market without seeking a credit rating. I view that as a sign that suggests great sponsorship from domestic investors in Hong Kong, in Singapore, and certainly across Asia in terms of adding Asian fixed income as part of their overall financial portfolio. Importantly, there are also many new investment-grade issuers tapping the market, providing variety. And I suspect that part of this is a mirror image of the improving sovereign credit fundamentals. Indonesia, for example, has migrated to investment grade. And in 2 years' time, we expect the Philippines to follow pretty much on the same footstep, moving up to investment grade for the first time. That will have a very strong and positive signaling effect for corporates residing in those countries of domicile.
What are the prospects for dim sum bonds?
Western Asset clearly views the structural demand for dim sum bonds as a very strong over the long term. We are also a qualified foreign institutional investor in onshore debt, but kind of thinking specifically about dim sum bonds, we are impressed by the way the market has grown over time. More importantly, we feel that there's a lot of value in some of the bonds issued in that space. In fact, after the correction from levels a year and 2 years ago, we feel that at today's levels there are some interesting stories within that space that bears monitoring. So I've mentioned earlier that some of the multinational corps that issue in dim sum bonds, that will be one key area of value add in terms of bolstering yield without necessarily adding too much of duration within the dim sum bond universe.
How are investors' attitudes towards local currency Asian fixed income assets changing?
That's a very interesting question, and it's something that we have thought a lot about, just from the evolution of the asset class over the last 10, 15 years. And when we look at an individual investor in Asia, the investment profile tends to be barbelled. So you have, on the one hand, safe, liquid assets in the form of cash, and on the other hand, at the opposite side of the spectrum, you have more volatile, higher risk alternatives such as equities and real estate. Right in between, it's a big gap. The good news is, right now, that gap is increasingly being filled by some asset classes, including and notably Asian fixed income. And we all know that corner solutions do not offer the best risk-reward profile for the individual investors. So from that perspective, as with education, as investors, individual as well as institutional, learn more about the opportunities within this space, we are very constructive in terms of developments in the next 2, 3, 5 years and now, increasingly, we do expect more new participants by country level. Some of the peripheral countries in Asia, as it turns out, Mongolia being one such case, have started tapping the hard currency debt market, and we suspect that that trend is here to stay for the foreseeable future.